Welcome. If you're tuning into this explainer, you probably already know the deal. Graduating from a small and medium enterprise platform to the main stage is literally one of the most significant milestones in any company's life cycle. It's a massive achievement. Today, we're going to walk through a comprehensive step-by-step roadmap for migrating a company straight from the SME platform to the National Stock Exchange main board. And we're not just guessing here. We're basing our entire journey on the latest, highly detailed compliance checklist straight from the NSE, which becomes strictly effective on May 1, 2025. So get ready, because we're unpacking the exact non-negotiable requirements you need to meet to make this happen.
Okay, let's dive into this. We are going to take a very dense regulatory document and break it down into 5 clear, manageable checkpoints. First, the main board migration. Second, are you financially eligible? Third, the compliance checkpoint. Fourth, mastering the paperwork. And finally, the final steps to listing. All right, Section 1, the main board migration, setting the stage. To truly appreciate this process, we kind of need to look at what you're leaving behind and what you're stepping into. Look, the SME platform is an incredible launchpad, right? But the main board, specifically the capital market segment, well, that's the ultimate prize. It brings unparalleled visibility, heavy-hitting institutional investment, and frankly, a lot of prestige. But leveling up isn't just about wanting it. It requires passing a series of strict financial, behavioral, and documentation trials. The National Stock Exchange of India has drawn a very clear line in the sand regarding exactly who gets to make this big leap. Moving on to Section 2, are you financially eligible? The financial gatekeepers. Before a single piece of paperwork is filed or any processing fees are paid, your company has to face the financial gatekeepers laid out in Annexure I of the NSE checklist. And the absolute first hurdle you have to clear is your capital. The exchange strictly requires that your post-issue paid-up equity capital, meaning the capital you're actually seeking migration for, is no less than 10 crore rupees. If you aren't hitting this baseline, the migration conversation stops before it even begins. Next, we look at the scale of your operations. And this is a bold number. Your company must have generated over 100 crores in revenue from operations in the last financial year. That is substantial. The guidelines clearly state that if consolidated figures aren't available for your business, your standalone financials will be considered instead. They basically want to see proven massive operational scale. So, the crucial point is beyond just revenue. We must look at your overall financial health, which is represented by a minimum net worth of at least 75 crores. And keep in mind, this isn't just some internal calculation you do on a spreadsheet. This figure absolutely must be officially certified by your statutory auditor and strictly adhere to the net worth definition laid out in the SEBI ICDR 2018 regulations. And hey, the financial checks don't stop there. The market actually needs to value your company highly too, requiring an average capitalization of not less than 100 crores. The math here is pretty specific. It's the product of your post-issue shares and the 3-month average of the weekly high and low closing prices right before your application. On top of that, you have to demonstrate real sustainability with a positive operating profit in at least 2 out of the 3 preceding financial years. Let's hit Section 3, the compliance checkpoint, rules and red flags. And this brilliantly illustrates exactly what they're looking for. Think of this phase as a rigorous, no-nonsense background check, where the exchange is looking for a pristine track record. There's a very clear divide between what you absolutely must have and what will instantly disqualify you. On the mandatory side, you need to have been listed on the SME platform for at least 3 years and boast exactly 500 public shareholders on the date of your application. On the flip side, the deal breakers are incredibly severe. Absolutely no insolvency proceedings admitted under the IBC, no debarments of the company, promoters, or directors by SEBI, and definitely no winding up petitions admitted by the NCLT. A clean slate is non-negotiable here, folks.
Now, let's talk about the founders. The NSE wants to see some serious, continued skin in the game. Promoters and the promoter group must hold at least 20% of the company at the time of making the application. Furthermore, your holding on the actual date of the migration application cannot drop below 50% of what you held back on your original listing day. Loyalty and long-term commitment are heavily scrutinized here.
Beyond the corporate structure, you need behavioral clearances. Basically, are you treating your investors and lenders right? You absolutely need 0 pending complaints on the Score's grievance platform. You must have 0 defaults on interest or principal payments to debenture, bond, or fixed deposit holders. Oh, and if your security recently exited a trade-to-trade category or any surveillance action, you're subject to a mandatory 2-month cooling period. And finally, there can be no material regulatory actions like trading suspensions against the company or promoters in the past 3 years.
Section 4. Mastering the paperwork, the documentation trail. So, to tackle the seriously dense requirements of Part A and Part B, it all begins internally with your corporate governance. You're going to need a certified true copy of the Board of Directors resolution proposing the migration. This is then followed by a postal ballot notice to seek shareholder approval, and the subsequent resolution proving they actually agreed. Crucially, your scrutinizer's report must confirm compliance with SEBI ICDR 2018, and pay attention to this, it must specifically separate the vote counts of the promoters from the public shareholders. Now, you cannot do this alone. You must bring in external experts to validate your company's health. Your statutory auditor has to certify your net worth and exactly how you utilized funds raised from the public. You're also going to need a practicing company secretary, or PCS, to provide a secretarial compliance report under Regulation 24A, plus another certificate confirming compliance with Regulation 46.2 of the LODR. Plus, you need to submit the Corporate Governance XBRL utility, which confirms your compliance with Regulations 17 through 27 of SEBI LODR. It's a lot, I know. A critical piece of this massive documentation puzzle is the Information Memorandum. It is the core narrative document containing disclosures per Part A of Schedule VI of SEBI ICDR 2018. But here is a critical warning straight from the exchange. The promoter and promoter group names in this document must perfectly match the names given in your original offer document. If there's even a slight discrepancy, a typo, or a change, a formal, detailed explanation is going to be required. All of this information eventually feeds into Part B and Annexer 2, which is the data you'll meticulously upload to the NEEPS portal. We're talking full names, addresses, and PANs for the applicant company, subsidiaries, promoters, and directors, alongside director identification numbers. You must map out your distinctive number range, detailing all locked-in shares. And remember, you must disclose your scores ID, and if any promoter group member is missing a PAN for whatever reason, you have to formally provide a reason why.
Almost there. Section 5. Final steps to listing. Crossing the finish line.
Let's move to and see how this builds chronologically into your actual physical submission. First up, you remit the non-refundable processing fee of 2,50,000 rupees plus taxes via NEFT or RTGS. Second, you submit your flawless application strictly through the NAPS online portal. Third, you wait. The NSE generally reverts within T+7 working days. Finally, if the exchange has queries, and they usually do, you are on a strict clock. You must provide satisfactory responses on an immediate basis and absolutely no later than 30 calendar days, or they totally reserve the right to just return your application. Once you get that coveted in-principle approval, the final listing checklist kicks in. The very last physical documents include a formal listing agreement, and note this, executed on exactly a 100 rupee stamp paper. You'll submit your latest shareholding pattern, notably without PANs included, but you really must ensure all promoter entities are disclosed separately, even if their holding is currently nil. You'll cap the whole shebang off with a final issuer certificate for corporate governance as of the date of listing. And of course, making it to the big leagues comes with an ongoing financial commitment. The annual listing fees for the capital market segment are levied on a proportionate basis. So if your listing duration on the main board for that financial year is 6 months or more, you pay the full annual fee. But if it's less than 6 months, you're only charged 50% of the annual listing fee. So, let's recap. The guidelines are rigid, the financial demands are incredibly heavy, and the behavioral checks, they are unforgiving. But for companies that have truly outgrown the SME platform, navigating this checklist is the absolute only path to the unparalleled liquidity and prestige of the NSE capital market segment. Looking at these stringent requirements, from those 100 crore revenue marks to having a flawless compliance history, the big question is your company truly ready to step up and conquer the main board?